I did it. I actually sold a stock from my dividend stock portfolio. If you've been following my channel for a while, you know that I rarely sell stocks because after all, I buy with the intent of holding on forever. And I do that because I buy for the dividend, for the cash flow. And I know that stocks that increase their dividends over time, I can achieve a phenomenal yield on cost, and I can use those dividends to pay for living expenses. And so when I buy, I never really have the intention of selling because it's all about yield on cost for me. I'm trying to let my dividend stream snowball over time. But this particular case, I really didn't have any great alternatives, and it made just natural sense for me to go ahead and sell my stock in Dr Pepper Snapple Company. I want to talk today about why I sold this stock, but more importantly, I want to talk about what I'm doing with the proceeds, why it made sense to sell this stock, because I could take the proceeds and do some really cool things with those proceeds. So get ready for another exciting video about dividend growth investing. So I sold my Dr Pepper Snapple. If you want to learn more about Dr Pepper Snapple, what's going on with it right now, I'm going to link in the description below to another video I did on this topic. This company recently got acquired. It's going to be acquired by the Keurig company. It's most likely going to happen. It's going to close this deal sometime in Q2. And so the stock is way up. Dr Pepper Snapple went way up on the news. But what's going to happen for people who own shares in Dr Pepper Snapple, they're going to get a one-time dividend, and then they're going to own some stock also in the combined company. But the amount of stock that one will actually get in the combined company, it's pretty small. It's pretty inconsequential in the scheme of things. And so for me, it made natural sense to go ahead and sell my Dr Pepper Snapple. Why? When I was to, let's just say I waited. If I had waited when I received that one-time special dividend, it's going to be taxed as a dividend, which is taxed at long-term capital gains. Well, I've already been holding my Dr Pepper Snapple stock for a very long time, so when I sold, my tax consequences, they're going to be long-term capital gains anyways. So whether I wait for that special dividend or whether I sell now, tax consequences are more or less the same. One could argue, however, Ian, you're selling all of it, but if you had waited, you would have had some money left in the combined company, in the Dr Pepper Snapple Keurig combined company. Well, for me, I would have sold that anyways, just because I don't really envision myself holding that company for the long run. It's not necessarily something that has a track record. It's not something that is really compelling for me to hold for the long term. And in particular, the position would have been so small in my portfolio that I didn't really want to hold something like that. And moreover, I didn't want to put more money into it over time to build it up. And so I would have sold that anyways. And again, it's just easier for me right now to go ahead and sell now. And the reason that I did this is a lot of stocks are on sale right now. The stock market is starting to correct, especially consumer non-cyclical stocks, the stocks that I love, dividend stocks. They've gone down. And one of the reasons that they've gone down is there's this concern about rising interest rates. As interest rates go up, income investors have other alternatives. They don't just have to buy dividend stocks for income. They can go to the bond market. I think there's just also some general concern around these companies now with some of the slowing revenue growth. I think there's going to be some challenges ahead in terms of picking revenue growth up. So I think that's a challenge that some of these companies are facing. I think also there's just general skepticism that there's this Amazon effect. Amazon is coming along, and are companies like Kimberly-Clark, Procter & Gamble, are they going to continue to thrive or not? Personally, I believe they will continue to thrive, but a lot of analysts out there are skeptical. They believe that Amazon may cannibalize some of the revenue from these companies. So anyways, a lot of the stocks that I love right now are on sale. And so I kind of had two options. I could wait on my Dr Pepper Snapple. I can wait until Q2, let the deal close, let everything work its way out, or I could sell now. The reason that I sold now is I knew that I was going to get out of this position anyways because I didn't want to own the combined company. And most of my money was going to be returned anyways as that special dividend. So what I did is I just accelerated things a bit. I decided to sell because I want to redeploy the money now. I want to take advantage now of these great opportunities. And I want to share why. It all really comes down to the math that is on this board right here. So before I did anything, 100% of the money that I had in Dr Pepper Snapple obviously was in that one stock. So it's 100%. The current yield on that company right now, it's really low. It's only 1.94%. The reason it's so low is it is a little bit of a higher growth company, and so it's one of these deceptive stocks. The current yield is never that good, but they raise the dividend really quickly. Well, all of that is probably about to end anyways, because everything's changing. I just don't know what's going to happen in the future with the combined company, whether it's going to be a dividend company, a non-dividend company, how quickly you're going to raise the dividend. I just don't have any data on that, and for myself at least, I don't like to enter companies that are net new companies. I like companies that have a track record, companies that have been around a long time. In this combined entity, I just don't know if it's going to be a dividend company or not, but at least the historical company really raised dividends quickly. And so the current yield was never that good. It's a little lower here than normal because it has gone up as well on the acquisition news, and so it's done quite well. And so my yield on cost, worth mentioning, is a 6.38%, and that's what's really cool. I've held this stock for a while. They've increased the dividend. I've done well on the stock. It's gone up, and this, my yield on cost, and this is on the initial shares I bought, not all the shares, but the ones that I first purchased, is a 6.38%. This right here is the magic, actually, of dividend growth investing. If one holds long enough, one watches the dividends increase. The yield that they have, the current dividend divided by their purchase price, the yield on cost, can go up really quickly. And so obviously this is a good yield on cost. If Dr Pepper Snapple was never acquired, I would have never sold it. I would have just held, I would have realized these greater and greater yield on cost, and I would have just held on. But it's being sold, and so really I didn't have a lot of options anyways. But I'm actually really happy how this worked out, and you'll see why in a minute. My total gain on Dr Pepper Snapple is a 212% gain. This includes the dividends and the reinvestment of dividends and the capital appreciation. It's all in. All-in gain, I made 212%. Not bad. I actually never really thought that this company would go so far. I was kind of surprised that I did so well on it, and that happens sometimes when one owns a portfolio of stocks. Sometimes one or two of them, or three or even more, they will surprise the investor, and this is one that surprised me. It just surpassed my expectations. It did really well, and I'm proud of that. It's been a nice gain, and now I've sold it and I've realized those gains. And so why did I do this? Well, I was just modeling things out in Excel, and when I modeled it out, I knew I was going to sell this anyways, and it made natural sense when I looked at the numbers. And this is what I wanted to show you here. After selling, here is what I'm doing with the money. It's actually a good chunk of money in terms of the portfolio. It's a Dr Pepper Snapple was never meant to be a core position. It was more like a small position, actually. That's what it was always meant to be, but it became one of my medium positions, and actually kind of on the upper tier of medium, just because it just grew so well. It did so well in terms of performance. Anyways, I'm taking the money from Dr Pepper Snapple, and I'm reallocating it as follows. I'm allocating it amongst some of my favorite stocks, and I'm so excited because a lot of these stocks right now, if not all of them, are on sale. And so I just did a video, by the way, on 3M, ticker symbol MMM. I'm going to link in the description below. I actually initiated a position already on 3M, a really small position, but I'm going to use some of my funds from Dr Pepper Snapple to add to that even more. So, but anyways, let me just go down the list. So what am I doing with the money? First and foremost, I'm going to pay taxes. About 10% of the total money that I'm going to garner from this sale is going to, off the top, go to taxes. And we all know that taxes have a 0% yield. And so I'm going to get a haircut there, I'm going to pay the taxes, and I'm going to have a 0% yield on that money. Number two stock that I'm going to buy, actually, I'm not going to disclose the stock, and I'm calling it number two here. You could probably guess what this is just based on the yield. The current yield on this stock is a 3.7%. The reason I'm not disclosing it here is I'm going to do a video, my very next video. I want to share my number two favorite stock of all time. That's what number two stands for. my number 2 favorite stock of all time. I want to do a full video on it. I don't want to give the secret away just yet because I want to build up some anticipation behind that video. I'm certain that you can all guess what it is now that I'm sharing the current yield, but maybe not. So anyways, I want to leave a little bit of mystery there, but stay tuned. It's going to be a really exciting video. It's going to be my next video. But anyways, I'm going to take 19% of the proceeds and put it in my number 2 favorite stock of all time that's currently yielding 3.7%. What else am I going to do? I'm going to put some of it in Kimberly-Clark, yielding 3.83% right now. I'm going to actually put 18% of the proceeds in Kimberly-Clark. I'm also going to put 18% of the proceeds in Procter & Gamble, which is yielding 3.94% right now. You can start seeing a trend here. Obviously, the taxes have a 0% yield, but everything else, it's yielding quite a bit more, a current yield quite a bit higher than the current yield on Dr Pepper Snapple, which is the 1.94%. You're seeing a story unfold here. It's very interesting. Let's go on. I'm going to put some money in Southern Company. You know that I like Southern Company if you've been watching my channel for a while. I'm actually going to put 14% of the proceeds in Southern Company, which is currently yielding 5.21%. And last but not least, I'm going to increase my position in 3M, a new position for me. By the way, when I take a new position, I like to quickly get it up to about 1% of the portfolio just so it's meaningful, but I don't want to go too fast. A new position actually needs to really earn its reputation with me. Just because I buy a new stock doesn't mean I'm 100% comfortable with it like I am with a stock that I've held for, let's say, 5 or even 10 years. And so for me, 3M, I'm going to build it up here, but I'm not going to go too crazy just because I want 3M to show me some results. I want to get more comfortable with it. I want to live with it for a while before I put even more money. But anyways, 3M right now is yielding 2.8%, so it's a lower yielder but higher on the growth side of that dividend. And I'm going to put in 21% of my proceeds into 3M, which will actually, combined with the money that I already put in 3M, gets it up towards that 1% range. And so I'm excited about that. It's getting kind of closer to that range that it needs to be at to have meaning in my portfolio, but I'm not putting too much where I'm over allocating into something brand new that I still want to learn about. I still want to become comfortable with. I want to live with it for a while. Anyways, I'm taking all this money from Dr Pepper Snapple, I'm putting it like this, and what does this mean? What's the purpose of this? Well, the weighted average, so obviously I'm putting different amounts in each of these. When I weight the average of all of these yields, and I'm even including the 0% on taxes, my weighted average comes out to a 3.43. That is a current yield, current weighted average yield versus 1.94 in Dr Pepper Snapple. This is an increase of 77%. So basically what I'm able to do here, even factoring in taxes, is I'm able to increase my dividend income that I was receiving from the portion of my money, the portion of my portfolio that was allocated to Dr Pepper Snapple. I'm increasing that current yield now by 77%, factoring in taxes. And so I'm excited about this. I'm following some of the stocks that were my core picks, my core selections for 2018. You know that my strategic themes this year are consumer non-cyclical, and in particular Procter & Gamble and Kimberly-Clark. So those just had to be on here. But you also know that Southern Company is a focus of mine this year. If you've been watching my videos, and I'll link to all these in the description below. I've done videos on all of these stocks here except this one, number 2. My number 2 favorite stock of all time. This one is really funny. I've been wanting to add to this one for a while. I really have been waiting, but it just didn't come down. But finally it came down. Finally it started trending down, and it trended down pretty aggressively recently. You guys can probably guess by now. But anyways, you'll see in the next video a whole bunch more about that particular stock. I'm really excited about, but I just had to add it to my list. And you know that my strategic themes this year, they were really Procter & Gamble, Kimberly-Clark. I think this one now is going to be the third pillar of my strategic theme. I was kind of waiting. What's that third pillar going to be? Well, my number 2 favorite stock of all time finally corrected. So I'm excited about that. And then I threw in some 3M for good measure and some Southern Company for good measure as well. And so I feel like I'm doing some smart stuff here with the returns that I received from Dr Pepper Snapple. Again, I would have never done this if Dr. Pepper Snapple did not get acquired, because my yield on cost is just so high, and I think this company as a standalone company would continue to grow the dividend really quickly. It would continue to perform very well for me, and I'm fine having a lower current yield if my growth rate on my dividends is really high, and that's what Dr. Pepper Snapple offered. But the fact of the matter is Dr. Pepper Snapple is no more. I don't know what the future company holds, and I'm just not the type of investor that wants to hold the combined entity. I mean, some investors might take the cash dividend and then rebuy the combined entity with that cash dividend. That's just not for me, because that company does not, the combined company doesn't have a track record. And so as a long-term investor, I just can't, I can't place a lot of weight, a lot of fundamental analysis on that. But anyways, I feel like what I'm doing here is a good combination of both high growth, medium growth, and low growth. Obviously 3M is a really high growth dividend. I'd say that's kind of more comparable to like a Dr. Pepper Snapple, high growth rate on the dividend. Southern Company, you're gonna have a slower growth rate on the dividend, but it's a really high current yield. And then Procter & Gamble, Kimberly-Clark, and number 2, they're kind of somewhere in the middle. Number 2 actually is probably a high growth like 3M, but they're all kind of in the middle. And so I feel like my weighted average here of all of the selections I am buying with the proceeds from Dr. Pepper Snapple, it's a nice mix, and it's going to help me achieve my financial goals in the future. These are all buy and hold for forever type of stocks. And so anyways, I'm really excited to share this video today because I know a lot of you ask sometimes, Ian, do you ever sell stocks? And here's an example. It's very, very rare, but this is one of those corner cases where it made sense for me to sell. It did not make sense for me to wait until Q2. I wanted to do it now because I wanted to take advantage of some of these current opportunities in the market. And who knows, maybe all of these stocks will trend down. Maybe they will trend down more. Maybe I could have had better opportunities if I waited, but I never really know. No one can really time the market perfectly, and all I know is right now, the opportunities are there, so I'm excited to take advantage of them. And quite frankly, I'm excited above and beyond my Dr. Pepper Snapple money. All of these are wonderful selections that I will continue to average into over the course of 2018. So there you have it. Hey, if you enjoyed the video today, I please invite you to subscribe, to give me a thumbs up, to like the video, to comment. All of that means the world to me. I cannot thank you enough for the support. We have a thriving community here, and we are all in this dividend game together. And so I really love the camaraderie, the comments, all of the great discussion that is happening on this PPC Ian YouTube channel. And a few things before I leave today, just in terms of full disclosure, I own the stocks that are listed in the video today. And so I am, in terms of full disclosure, I am long on Kimberly-Clark, ticker symbol KMB, Procter & Gamble, ticker symbol PG, 3M, ticker symbol MMM, Southern Company, ticker symbol SO. And in my next video, you'll find out about that one as well, my number 2 favorite stock of all time. I'm so excited about that video. In terms of a full disclosure, in terms of a disclaimer, actually, this is not investment advice. I am not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. Thank you for watching today's video. I will see you in the next one.